All right, good afternoon, everyone. My name is Jim Schowalter, Commissioner of Minnesota Management and Budget. Happy to have you here. We're going to be going through the February forecast. With me today is Dr. Laura Kalambokidis, our state economist, and Ahna Minge, our state budget director. We'll provide you information on the state's budget as well as monthly U.S. economic information from our consultants, IHS Markit. After our presentation and Q&A, Governor Walz will join us and take your questions. It works. This forecast today anticipates a $1.5 billion improvement in the forecast for this current biennium. Our budget situation is strong. We're seeing a significant share of the money already in the bank, and we're in much better position to handle risks. The February forecast is normally a pretty simple affair, a light update from the November forecast. However, in the last couple of years, we've seen a different pattern. With a number of changes and on risks out in the economy and in society, February forecast has seen its share of changes. We've seen, sometimes it's hard to even anticipate what's going to happen next month, much less next year. The update part of this forecast is good news. We see an additional $1.5 billion, largely one-time money, and that's a significant improvement. Combined changes from the last forecast bring our surplus to more than $9 billion. But the uncertainty has not stopped. Even as we put the final numbers together for this forecast, the news broke, the terrible news broke, of the Russian invasion of Ukraine. This news is also significant and could put a dent in the anticipated forecast improvement. It's a challenging time to issue a long-term forecast. Of course, that challenge is nothing compared to the fears and challenges of families, the Ukrainian families here in our community and abroad. Through news and social media, we're seeing the terror of war happen right as it happens. None of this was anticipated a month ago. A Russian invasion of Ukraine wasn't part of our national economists' national economic model, and it changes some things. You look at the oil prices anticipated in this forecast, they'll become higher. You look at markets and financial markets, they're going to be unsettled. That's why the discipline of issuing a forecast in February makes a lot of sense. With breaking news, it's much easier to see the disruption than it is to see the adjustments that go with it. As with COVID 2 years ago, the news can be so fresh, hard to see anything else. So we present the forecast today. We know a little bit more. We've updated what we can. We acknowledge that there's still some uncertainty. And we plan to monitor and share information as we get it. Of course, if we do encounter problems in the next 16 months, our budget outlook is strong, and we're in a much better place to start working. Looking at the fiscal 22 and 23 biennium, you'll see that we're anticipating a positive balance of $9.3 billion, up about $1.5 billion from November. Higher income, consumer spending, and corporate profits lead to this improved revenue forecast. While many of the changes are one-time in nature, we continue to see a structural balance going into the next biennium. Now, as always, our forecasts do include a degree of risk, and Dr. Kalambokidis will walk through some of those changes later in this presentation. On the numbers, you see the specific revenues and spending. We're anticipating now that revenues are going to top $57 billion, about $1.3 billion better than previous estimates. Our spending numbers are down somewhat, about $270 million lower because of slight changes in education and health and human services. The budget reserve numbers are the same. The budget reserve changes only happen in November based on current statute, so there are no changes there. The only change is $15 million, which is in the stadium reserve account associated with charitable gaming that goes and helps pay off the stadium debt. So that's the overview of where we're at with this forecast. I'm going to turn it over to Dr. Kalambokidis to walk us through the national economy, the state's economy, and how that drives our revenue and our revenue outlook.
Thank you, Commissioner. Thank you, everyone, for being here today. Again, I'm Laura Kalambokidis, Minnesota State Economist. I'll start with the U.S. economic outlook and how it's changed since November. I'll move to talk some about Minnesota's economy and Minnesota's labor market, and then turn to details of our new revenue forecast. The U.S. economy continues to recover from the 2-month recession that was triggered by the outbreak of the COVID-19 pandemic in the spring of 2020. In December of 21, the U.S. unemployment rate fell to 3.9%. Total employment had recovered to 97.8% of the pre-pandemic jobs numbers, and unemployment benefit claims had receded to 2019 levels. Home values, financial asset values, and corporate profits have all risen. The economy is forecast to recover to pre-pandemic employment levels this year, and economic growth is forecast to continue. Nevertheless, as you heard from the Commissioner, significant challenges to the U.S. economic outlook remain. Inflation, supply chain disruptions, labor force participation, the path of the pandemic, and newly, Russia's invasion of Ukraine all pose risks to the economic forecast. In the first chart, we're showing the IHS forecast for annual growth in U.S. real GDP. The gray bars show IHS's November outlook, and the blue bars show their February forecast. IHS now estimates that U.S. real GDP grew 5.7% last year, faster than the 5.5% they assumed in the November outlook. In addition, the winter Omicron wave of COVID-19 dampened consumer spending on services, slowing growth at the beginning of this year. Consequently, IHS now forecasts real GDP to increase 3.7% in 22, down from 4.3% in their November outlook. Growth is then expected to further decelerate to 2.7% in 23, down from 2.9% in November. Similarly, the growth forecasts for 24 and 25 are each 0.1 of a percentage point lower than in November. The forecasts for some underlying important economic variables have been raised since November. Forecasts for nominal consumer spending, wage and salary income, and corporate profits, variables that include the effect of inflation and influence tax revenues, are all higher than in November. Price inflation exceeded expectations in 21 as demand recovered faster in some capacity-constrained sectors than supply could match. In December of 21, the consumer price index rose 7.1% over December of 20. This brought annual inflation to 4.7%, the highest annual reading since 1990, and above IHS's November forecast of 4.5%. Higher and more widespread inflation in 21 has raised expectations for price increases this year. For 22, IHS now forecasts 4.5% inflation compared with 3.3% in November. IHS continues to expect inflation to be eased by the gradual resolution of supply chain issues by increased labor force participation. They also assume that households and business owners are confident in the Fed's ability to control inflation with monetary policy. Consequently, IHS expects price increases to slow in the second half of this year, and they forecast CPI inflation of 1.9% in 23 and 2.1% annually in both 24 and 25. Note, however, that the current IHS outlook was prepared early in February and does not reflect risks to energy prices, agricultural commodity prices, overall price inflation, and financial market volatility arising from Russia's invasion of Ukraine and the related sanctions against Russia. In their February outlook, IHS expected the Federal Reserve to begin taking action to raise the federal funds rate, interest rate in March of this year. That's 1 year earlier than they assumed in November, in the November outlook. More persistent or higher inflation could lead to earlier Fed action on interest rates, which could result in slower economic growth than is assumed in this forecast. In this chart, the height of the bars shows annual growth in U.S. total wage and salary income. This value can increase if more people are working or if wages per worker are rising, or both, and it's nominal. This means it can be boosted by inflation. And again, this is the sum of all of the payrolls of all of the employers in the United States. It's not wages per worker, so it's not an hourly wage or an average wage, it's the total payrolls. IHS expects the tightening U.S. labor market, meaning low unemployment and a high demand for workers, to drive up wage and salary income. They now estimate that wage income grew 9.1% last year, above the 8% they forecast in November. They forecast an acceleration to 9.4% this year, up from their prior forecast of 7.9%, followed by a deceleration to 5.8% in 23. The forecast for wage and salary income growth has been revised downward, an average of 0.3 of a percentage point for the years 23 through 25. This chart shows levels or dollar values, not growth rates, but dollar values this time, of U.S. corporate profits, which continue to exceed expectations. The solid line shows IHS's February outlook, and the dashed line shows what they expected in November. Corporate profits, which are the main factor determining Minnesota's corporate tax revenues, were unexpectedly strong during the second half of 21, growing 36.9% over the whole year, and driving higher than expected corporate tax receipts so far in fiscal year 22. In this outlook, corporate profits are expected to exceed the November forecast through 2025. Moving to Minnesota's labor market, this chart shows the official unemployment rates for Minnesota, that's the dark line, and the U.S., which is the light line. You can see the sharp spikes in employment in 2020 when Minnesota's unemployment rate reached 11.3%. As of December 21, the state's unemployment rate fell to 3.1%, 0.9 of a percentage point below the U.S. unemployment rate and the 12th lowest among U.S. states. But the overall unemployment rate doesn't tell the full labor market story. In particular, it does not reflect Minnesotans who have left the labor force, including retirements or those staying home to care for children. Since the onset of the pandemic, Minnesota's labor force has fallen by 87,000. As of December, Minnesota's labor force participation rate was 67.7%, 2.5 percentage points lower than in February of 20. Nevertheless, the state's participation rate remains high relative to the United States, 5.8 percentage points above the U.S. rate, and it is the sixth highest among U.S. states. As with the U.S. forecast, we do expect low unemployment and a high demand for workers in Minnesota to drive up total wage and salary income in the state. For another picture of the labor market, this chart shows total employment in Minnesota, so the line represents the number of people in jobs in the state, and it illustrates the state's steady job growth since the recession of 07-08. In March and April of last year, as the pandemic was taking hold, Minnesota lost 416,000 jobs, about 14% of February 20 employment. Since then, state employers have added jobs. Oh, and I misspoke. In March and April, not of last year, but of 2020. In March and April of 2020, as the pandemic was taking hold, Minnesota lost 416,000 jobs. Since then, state employers have added jobs in most months. Through December of 21, 307,000 of the jobs originally lost had been recovered. Minnesota employment is now 109,000, or 3.6% lower than in February of 20. Turning now to the revenue forecast, the first column of the table shows our current forecast for fiscal years 22 and 23, and the second column shows the forecast change. Since November, general fund receipts have exceeded our forecast. So the receipts coming in have exceeded our November forecast. Those higher tax receipts to date in fiscal year 22 and the improved outlook for income, consumer spending, and profits raised the revenue forecast for fiscal years 22 and 23. Total general fund revenues for the current biennium are now forecast to be $1.252 billion more than in the November forecast. We've raised the forecast for all major tax types. Individual income tax receipts are now forecast to be $498 million more than the prior forecast. The changes to the biennium are front-loaded. 70% of the increase occurs in fiscal year 22. Higher growth in wage and non-wage income, especially business income and capital gains in calendar year 21, raised the income tax forecast for the remainder of fiscal years 22 and 23. Sales tax revenue is now forecast to be $212 million more than the prior forecast. The increased forecast is consistent with the higher nominal consumer spending I mentioned earlier and is also due to higher than expected collections so far this fiscal year. The corporate tax is the same story. It is projected to generate $324 million more than the prior estimate based on the higher forecast for corporate profits that I mentioned and higher collections so far this fiscal year. So let me finish by reiterating some of the risks to this forecast. The assumption embedded in this forecast that inflation settles back into the 2% range next year depends on the resolution of supply chain blockages, higher labor force participation, and on the effectiveness of monetary policy to control inflation. However, bringing down inflation is made more challenging by the surge in energy prices following the Russian invasion of Ukraine. Higher energy prices drive up general price levels because energy is an input to the production and distribution of consumer goods. And higher or more persistent inflation can change the timing or magnitude of actions by the Federal Reserve and could slow economic growth below what is assumed in this forecast. But beyond price levels, additional impacts on the world and U.S. economies from the Russian invasion of Ukraine and subsequent sanctions against Russia pose some unknowable risks. As it has for the past 2 years, the economic forecast continues to depend on the path of the pandemic, including the impact of any newly emerging coronavirus variants or treatments. And finally, with 16 months remaining until the end of the 22-23 biennium, even small changes in assumed rates of growth in important income and revenue sources, such as capital gains income or wage income, can generate large changes in the outlook for this biennium and the next. I'll now turn it over to State Budget Director Ahna Minge.
Good afternoon, I'm Ahna Minge, State Budget Director with Minnesota Management and Budget. Today I'll be walking through changes on the spending side of the general fund budget. And this table really encapsulates all the changes we're seeing in the current biennium. As you can see, overall spending changes are relatively small, about 0.5% lower than in this biennium than in our November forecast. As you can see, E12 education, which is the largest area of spending in the general fund, is $158 million, or about 0.8% lower than our November projections. This change is due to several dynamics. First, the forecast reflects fewer than expected pupils in both the previous school year, sort of the 2020 through 2021 school year, and the current school year, which affects future projections. The forecast also reflects lower spending in special education transportation costs. This is because actual costs were lower in the previous school year as more special education students relied on remote or distance learning. In addition, the forecast incorporates lower spending on compensatory aid as a result of fewer applications for free and reduced price school lunch. This is primarily due to pandemic-related federal programs that provided free meals to students without the need to apply. Health and Human Services, the next line on the table, is forecast to be $108 million, or 0.7% below November estimates. The largest driver of this change is the extension of the federal public health emergency. As a result of federal legislation passed early in the pandemic, Minnesota receives a 6.2 percentage point increase in the federal Medicaid match for quarters in which there is a public health emergency related to COVID-19. In January of 2022, the federal government extended the emergency into April, allowing us to capture an additional quarter of federal match. The extension results in an additional $143 million in federal contributions for medical assistance. However, some of that is offset by increased costs to the state as a requirement to maintain continuous coverage for enrollees. On net, the extension is expected to save $65 million to the general fund. The forecast also reflects $40 million in savings due to lower use of the state's child care assistance program as a result of the pandemic. Caseloads are expected to return to pre-pandemic levels by the end of fiscal year 2023. You can see spending for property tax aids and credits is forecast to be $15 million, or about 0.4% lower than previous estimates. This is the result of fewer homestead credit refunds and renters' property tax refunds in the current year. Projected debt service costs are relatively unchanged, and then all other areas of the state budget combined had $12 million in higher spending compared to November estimates. In total, general fund spending in the current biennium is forecast to be $270 million lower than November estimates. However, the bulk of these changes are one-time, and the spending changes in the planning years are much smaller. And I'll turn it over to Commissioner Schowalter.
Thank you, Ahna. This last slide should look pretty familiar. It is the long-term budget outlook. And as mentioned earlier in the briefing, our revenue improvement was largely one-time, but not exclusively. What you see here is our projected revenues and spending for the current biennium as well as the next biennium, and comparing the two. So ongoing revenues, ongoing spending. The structural balance improves from about $5.6 billion in the current biennium to about $6.3 billion in the tails. Slight improvement from the previous forecast. What this does and doesn't reflect, though, is that 3 and 4 years out is certainly more uncertain than even what we're anticipating in terms of revenue and spending a year out. As I mentioned at the beginning, we're having a hard time sometimes understanding what's going to happen next month, much less 3 or 4 years from now. So this is clearly the most volatile and uncertain part of the forecast. The other element of this is also really familiar to you all, which is it doesn't include the estimated impact of inflation. The figure for the next biennium is a little over $1 billion based upon the assumptions in this forecast. So the spending does not include that effect while the revenues would. It does not also include the inflationary impact for the current biennium because, as you all know, we forecast on current law. And so our appropriations are set. That brings us to the close of this forecast. What we've seen here is that the state's economy continues to recover. There's been a lot of uncertainty, a lot of question marks that we've all worked through. As a community, we've dealt with those in the last couple of years. Although inflation continues to be a concern and the unfolding Russian invasion of Ukraine introduces new risk and uncertainties to our forecast, our budget outlook remains strong. This is due in large part to extraordinary efforts of parts of Minnesota workers and businesses. We've continued to adapt and thrive and find ways to continue working through this ongoing pandemic. I'd also like to thank the team at MMB and state agencies that prepared this forecast. We get to present it, but there's a lot of great professionals who are putting together this information in an uncertain time with uncertain prospects of what's going to happen next. Together, that forecast forms the document that you'll find online at MMB's website with all the detail, all the in-depth narrative that you would expect. In addition, you'll find information on fund balances for the Healthcare Access Fund and other separate non-general funds, the detailed information for the general fund, the debt capacity report, and other information. So with that, that is our February forecast. Really happy to present it to you today and open to take questions.
Commissioner, since you just mentioned it, and you know my traditional ask, what is the debt forecast?
The debt forecast really looks at the question of what is our state guidelines for debt capacity based upon our revenues and compares them on 3 different items. I should look up the exact numbers, but you can find it in there that the debt capacity on number 1 is different than the debt capacity on number 2, which is actually different than the debt capacity in number 3. The whole purpose is to really make sure that we have an affordable, sustainable debt portfolio for the state. And so we measure it in a couple of different ways. The most constraining of those are a little over $2 billion. Some of those figures are well over $3 billion.
Commissioner, could you speak to your estimate that much of this increase, I think you're saying, is one-time money? Because if you look at the numbers, wage growth continues, corporate profits continue, you've got a big surplus in the next biennium. So why are you thinking this is one time? And I assume you're cautioning budget writers to consider it as a one-time type increase.
Yeah, given my position, caution usually comes with part of where I sit. Looking at those uncertainties and trying to make sure we manage those risks. Fortunately, we have a lot of tools. We have the budget reserve, we have the cash flow account, we have good information. We have a diverse economy. But that said, we're still trying to make sure that we look at it. In terms of one-time versus ongoing, a simple way of looking at it here is the structural balance. So you see here in 22 and 23, we've got about a $5.5 billion structural balance. So that's sort of the contribution of the bottom line in the current biennium. We have a $9 billion, more than a $9 billion surplus. The remainder is essentially one-time. So that's kind of the question of how much is one-time, how much is ongoing. Of how much is in the bank, about $4 billion is essentially in the bank. We had about $3 billion, $4 billion that we know of that so far. We'll see how the rest of the biennium goes. And so that's where the uncertainty in this current biennium goes. Perfect. Come on up.
Knowing that, and then of each of those two areas, I think inflation, folks pretty much understand how that would play out, but the geopolitical, what areas might that affect Minnesota specifically?
So what's interesting about this brand new set of risks is that they land on top of risks that we already had. So inflation was a risk in the November forecast, it's a risk now. And the reason, and even before the invasion, Russia's invasion of Ukraine, it was a risk because IHS is assuming that inflation does become subdued, that it does get back down in the course of our forecast horizon. And they were assuming that because they have looked carefully at those sources of supply chain blockages. They've looked carefully at labor force participation. They've looked carefully at where businesses and households anchor their expectations of inflation, and that they believe that the monetary policy is going to be effective. But if those things don't pan out, then inflation could be higher in the outlook than what we had. And then the largest risk, so the risk of that is, of course, that if inflation is higher, of course, everything costs more and households are paying more for goods and services, but also it means that the Fed might act more aggressively than what is assumed in this forecast, which raises interest rates sooner or higher than what is assumed, and that slows economic growth. So in that environment and on top of those risks, then we have an impossible to foresee impacts from the Russian invasion of Ukraine. The things that seem most obvious are that oil prices, which had already been rising because of the buildup of Russian weaponry along the Ukrainian border, oil prices being higher, which raises inflation in general. Commodity prices, in addition, can be higher. This is something that can more readily affect Minnesota, more specifically affect Minnesota, when Russia and Ukraine can no longer produce the agricultural output that they normally do, that can raise prices. That can raise prices for Minnesota producers of those same goods, although Russia and Ukraine are primarily producers of wheat, which we do produce, but it's not our main commodity. But it also increases inputs for food producers, for instance. So those are some of the impacts that we might see in Minnesota more directly. Of course, there are businesses that have direct connections to Russia and Ukraine, and they're having to mitigate risks. Of course, we have families and households who have family and friends in Ukraine. They're facing the hardship as well. But the other thing that can happen is that as the U.S. economic outlook, if the U.S. economic outlook gets revised down going forward, then that will affect generally growth in Minnesota, because Minnesota's economy, as diverse as it is closely tied to the U.S. economy.
Commissioner, given all these caveats that you and your team have laid out, how much faith do you put in this projection that you're putting out?
Great question. You're right. We do put out a couple of caveats here, and I still have a lot of faith in this. It is really difficult to issue a long-term forecast, even as the economy and the world continues to change. What we have is a snapshot that updates our information of what we know today. We're never able to answer all the questions of what's going to happen tomorrow. But I think we've dealt with a lot of those questions pretty successfully, and the state is in a strong budget position to continue making progress on all of the problems, all the questions, all the hangovers from the last few years, so that we can keep on moving forward with momentum. So I think this is a good piece of information. I think it's a important reference point. And as always, it requires judgment and constant diligence just to keep on updating, because there are a lot of things that continue to happen in the world.
Dr. Kalambokidis, can I just get back to what you were talking about? You mentioned wheat. I was thinking of wheat and sunflower and other commodities. Are there aspects of Minnesota's economy that are directly intertwined with Ukraine's and Russia's, or in other ways could get tied up in that conflict directly?
So Minnesota doesn't in aggregate have a lot of trade exposure to Russia or Ukraine. Our main trading partners are Canada, Mexico, and China. And I think that neither Russia nor Ukraine comes up into the top 10 of our trading partners. That is not to say that there aren't important Minnesota businesses that do have exposure in Russia and Ukraine, and they are mitigating those risks as we speak. One of the impacts that seems fairly obvious is higher agricultural commodity prices for those goods that Russia and Ukraine export. Wheat is one, sunflower oil is another. Minnesota produces both of those, and so those producers may see higher prices for their commodities. They may be incentivized to plant more, but those are not the major commodities that Minnesota produces. Not even the major grains that Minnesota or plant commodities that Minnesota produces. So indeed, there are businesses that are facing significant exposure, but in the aggregate as an economy, it's not an extraordinary amount of exposure.
Dr. Kalambokidis, right over here in the front. I was comparing the growth in the tax revenues that are collected from individual income tax, corporate franchise tax, and sales tax. There's some big differences between sales tax and individual tax and corporate ones. I think estimates of like 1.6, 1.7 for the first two, and then as high as almost 8% for corporate franchise tax collections. What accounts for those big differences between those categories there? Why are corporate tax collections so much higher than the other ones?
Yeah, the percentages that you cite are the forecast percentage changes. So it is how much those forecasts changed from November to now. And indeed, in percentage amounts, the individual income tax and the sales tax, the forecasts have increased less than the percentage increase in the corporate tax. The reason for that is that corporate profits, not just profits by Minnesota companies, but U.S. corporate profits, is the driving variable behind what determines corporate receipts in Minnesota. And corporate profits are the most volatile income source. So the corporate tax is our most volatile revenue source. And corporate profits are highly volatile, meaning they move around a lot. And in the chart that I showed you, corporate profits have exceeded expectation for the last couple of years. And so that makes the corporate tax one of the hardest to forecast. So the forecast changes can be higher. I see the governor's here, so I think I'm...
Can I ask one question quick? About your slide on labor force participation, it showed that we're 3.6% below pre-pandemic in terms of labor force participation. But it also says in the text of the report that labor force participation rate does not reach pre-pandemic level in the forecast horizon. So those missing workers, the 109,000 or whatever, are they gone forever, never coming back?
So to be clear, the 3.6% is the percent that we're below our pre-pandemic employment level, not labor force participation. And so we are expected to reach the pre-pandemic employment level I think in a year, so a year following the U.S. So our employment recovery lags the U.S. Now, the statement in the book about labor force participation rate, so I'm delighted to pitch the book and all the information that's in there. That specific statement is about the U.S. labor force participation rate. And what I said that IHS is assuming higher labor force participation at the US level, and that's one of the reasons they think inflation is going to come down. But they did lower their forecast of labor force participation between November and February. So they have brought it down so that it doesn't reach the US labor force participation rate doesn't reach the pre-pandemic level within our horizon.
I think obviously all the information is going to be available. We're happy to answer questions afterwards, but let's turn it over to the governor.
Thanks, Jim. Well, good afternoon, everyone. I want to give a thank you to the folks at MMB, Commissioner Schowalter, Budget Director Minge, and Dr. Kalambokidis. Thank you for kind of updating where we're at. I think in a summarizing what they said, this is a good position for Minnesota to be in. I want to thank all the folks out there over the last couple of years that has been very difficult, both economically, from a health perspective, and then just socially, things have gone through. And this has been a roller coaster. These are usually perfunctory. After November, they're usually relatively predictable. That is not the case. And if you recall, in early 2020, when we very cautiously had a one-page supplemental budget because of the unknowns that were there. And I think from Minnesotans' economic fortitude during the pandemic to the handling of the pandemic and to where we are today, this is good news for Minnesotans. Some of you who've done this for a long time know that nothing MMB does is not by chance. They deliberately put things up here. I'm going to assume that our slide is spring that's coming, and I think that's probably appropriate today. This is the first time we've been in this room that felt a little bit like pre-COVID for many of us. The numbers today on COVID front are as good as they've been since last August. In some cases, better than it's been the whole time. There's every reason to believe that from hospitalizations to vaccination rates to a return to most basic economic activities, we're exactly on the right path. And what this gives us is an opportunity as Minnesotans to make sure that we're investing in Minnesotans right now. And I'll make my case again. This gives us the opportunity to get those checks right in the hands of folks now. This new number on there, we can triple those, and the numbers that we're looking at is about $500 a person, $1,000 to a couple. That's money right now. That's a difference. It's the one-time money that comes out. We're able to do that, and then we're able to look at those long-term ways to reduce costs. And I think there's a lot of space in here for compromise. You're hearing some of the ideological things. That's exactly appropriate for the legislature, and we do it. I am fully aware that we're going to have to compromise together. The good news is we can compromise on a whole lot of fronts to make life cheaper for Minnesotans, both now and in the future. We can continue to invest in things like education and healthcare, reducing those costs, making them more accessible to folks that improve quality of life, and then continuing to make sure that we're keeping up with our infrastructure through bonding and other things. That's a good position to be in. So we can do a little of both. It's not either or. To make those costs, make those reductions, make them both immediate, and then make some of the long-term reductions that need to go into this. I'm excited about this. I think the idea that the things that you see us kind of debating about, I would ask the legislature, it sure seems like after today and where you hear about the money that's in the bank versus some of the projections, we're in a place right now where two priorities that have been out there for quite some time, replenishing the UI trust fund and getting the hero pay out to folks, those would be an important thing for a lot of folks. Been very bipartisan. We agreed last legislative session to do the hero pay. We've got more capacity to do that now, so we don't have to pick and choose as much. We include those folks who are on the front line, whether they be processing food or whether they be healthcare workers, long-term care workers. There's a lot of agreement there. And then the UI Trust Fund gives us the ability to provide stability for those folks. It worked at the time that we needed it, and it'll be ready if we need it again. We've done all this by having historic rainy day funds in place. We've done it responsively. We continue to make those investments. So I have to tell you today, it seems right. I will acknowledge, as you heard here, the illegal and absolutely unacceptable invasion of Ukraine by Russia throws the world economy into a bit of uncertainty. We know especially around fuel prices that are impacting Minnesota's families. So there is macro level economics that are happening on this. Minnesota has to take a look at that, but we're also well positioned for a micro level of getting money in the hands of Minnesotans right now, reducing those costs again, child care, health care, some of those, reducing long-term costs. I think it's absolutely appropriate, and we have those things in there, child tax credits, child tax reductions, other things that are being looked at. There's a lot of great ideas out there right now that both put Minnesota's families in a better position, but don't jeopardize our long-term future. And we'll get a better idea of what happens. I think you're going to see hopefully a quick and peaceful reconciliation to the situation in the Ukraine, but a continued trajectory on an endemic state to COVID-19 also lets us. You're already seeing the return back to work. You're seeing some of the things that we knew would start to happen. So uncertainty, yes, but a solid position, ability to get this done right, a lot of collaboration, and I think agreement, what I'm seeing come out of legislative proposals to do what's right for Minnesota. So I'll be glad to take any questions. Again, you've got some of the more in-depth briefs here, but we'll try and go with it. I'll go in the back. Go ahead.
Governor, you talk about triple the checks. Would you elaborate on that a little bit? Who and when? How
Yeah,
much?
we had about 3.8 million folks in there. We put those out. I think this direct payment right now, especially what we're seeing, you saw it today already. Energy costs are very dependent globally. We know some of the strains that are in the supply chains and other things, but the geopolitics of what's happening in Europe, it's without a doubt we're going to see gas prices go back up again. You heard the briefs on this. We're going to see a leveling out of inflation, but it's going to take a little bit. It'll probably be into the third or fourth quarter of this year. And I think the reason that the checks make such a difference now is you can put a significant amount of money in the hands. It's about $1,000 a couple or so right now. Many of those folks would be the same folks who would receive the hero pay up to about $1,500. And then some of the tax cuts that are being proposed, they'd see as an ongoing basis. I don't think those things put us at jeopardy of our long-term stability in our budgeting, but they also do a quick one-time money into the hands of folks as we look towards summer. So with this new amount that's in there, we go back and look again. So it's about, as I said, an individual, about 500, a couple would receive about 1,000, and that includes the vast majority of Minnesotans. You're going to see a lot. Yep.
Governor, I know you mentioned you want the legislature to do unemployment trust fund and hero checks with this money. The deadline for the uninsurance trust fund backfilling that is 2 weeks away. Do you think the House should go ahead and just act on that and get that done, even if the hero deal isn't worked out?
They should do them together, and I think we asked last week, and I was told by Senate leadership that they weren't that interested in the hero pay. That's fine. I mean, it's an ideology. If they don't believe that, they said it was a smaller slice. But this is about what compromise does. I think both of those things need to be done. And I think the idea, and I'm hearing come out of folks that we're looking forward. Yes, we're all looking forward, but there's a recognition that COVID and the impact it had was not equally spread out, and that there was some of these folks that we had this agreement last May that we should try and take care of them. I just think it makes sense in any of these things. These are two things that a vast majority of folks on both sides of the aisle agree on. They are both economically sound decisions because we know that hero pay will work as a stimulus too, and especially for those families. So I would not going to get involved with the negotiating between the House and the Senate, but I would say if Minnesotans are listening on this, we can do all of this stuff. It's not that hard. Couple things together, make a few compromises around that, get those things done. They need to get done. We know we can't dig in, and I proposed the idea around the UI. I asked for the hero checks consistently through the fall that we got done. And if you recall, the reason we couldn't do that was because there was a threats during the Omicron and the Delta surge of the health commissioner being that. That is now out of the picture. So I don't know why we wouldn't just take care of that. So I would just encourage them to do that. I won't say whether they should pick one or the other, but it's a smart thing to do. Sean?
Governor, in light of the war in Ukraine and the impact it may have on our state budget, are you willing to follow the actions of your fellow Governor Phil Murphy in New Jersey and call for a boycott of all Russian products and call upon Speaker Hortman, Senator Miller, and as well as your declared opponents from the Republican Senate, Senator Gazalka and Benson, to put forward legislation that have a structured boycott against Russia, as well as calling for the investment board to meet and divest of any Minnesota portfolio that it has with Russian ties? And are you willing to go as far as suspending the visas for Russian students in our colleges and universities? Donald Trump set the stage for this in his presidency, kowtowing to Vladimir Putin.
Yeah, Well, my guess is I don't think I would assume that, again, having traveled enough and worked on foreign policy enough, don't associate citizens with their governments in many cases. And I would say the case of this, that we know that our students that are here, I think that's probably a step that I don't think makes a lot of sense. But this whole idea about how do we make sure Russia's being punished, it's going to be, of course, on a broader scale. There are going to be the economic sanctions. And again, very cognizant that Vladimir Putin and the oligarchs are not going to feel pain. The average Russian is going to, many of whom are courageously in the streets protesting about this illegal incursion into Ukraine. As far as state investments go, I've asked our teams to take a look at some of this. We know that we have right now, the State Board of Investments has 2 areas where we have disinvestment and that we continue to monitor. That's with the nation of Sudan and Iran as we stand right now. So there's an opportunity to go ahead and take a look at that. We have a fiduciary responsibility, but I want to be clear, hiding behind a fiduciary responsibility, and this is what you'll see some nations do, rather than making sure that we're taking the actions necessary that aren't just to be symbolic, but actually force changes. So I think right now, expelling Russian students are here, many of whom would be, my guess is, may end up deciding that this is the place they want to live, this is the place that they'd rather stay. I don't think that gets at it, but I do think it makes sense to look at some of these other proposals. I don't know what those investments are directly. I'm seeing some folks bring this up, but I don't know if their State Board of Investments functions the same way as ours. I don't know what kind of investments they have. Tom?
Governor, last week Republicans proposed pretty massive income tax cuts. I'm certain you won't go as far as they wanted to go, but is there room, given this forecast, for some across the board?
Yeah, absolutely. I have it in mind. Absolutely. I think the question that you're going to see here, and it's just going to be, this is ideological. I don't even say it as a pejorative. You're going to see the Republican proposals will make sure that those tax cuts go clear to the very top. So when you cut the first tax bracket, which I think we're certainly willing to take a look at some of that, that applies to everyone all the way up. They could structure that to exclude tiers 3 and 4. They could structure it to exclude changes to, say, the estate tax of, 20 people who end up falling in that. We'll see if that happens. But I think focusing on working families like we have, that does make sense. And I think, again, structurally, I have to be very careful of these folks coming up here, because when they hear us say that, because we know what happens, slight twists in that, say a 1/4 or 1/2 percentage point, which I think it makes sense for us to start talking about what can we do, especially for working Minnesotans. What does that do long term? What are the long-term costs? So I think the original proposal, the first piece of that came out, is several $billion. That would be several $billion every year that would be ongoing. But just to be clear, that first chunk of money that we make, and that number would be reduced far down in the tax cuts you receive for many Minnesotans, that would go all the way to the richest Minnesotan would also see a tax cut. I think I'm fine, and I think there's space in here for us to talk about that, but I think it needs to be crafted in a way where you're excluding those top brackets. Yeah, go ahead.
Governor, you said at the top that this is good news for Minnesota, and I'm pretty sure we're going to hear from Senator Miller something along the lines of that the state of Minnesota has been over-collecting its taxes. We've got a state budget that is a surplus about 17% of the entire state budget. And can you see the argument on the flip side? I mean, how is that necessarily a good thing to have collected almost 18% more?
It's a simplistic, if you listen to the presentations here. So again, just to be clear, we've also had these, and I know that the standard reaction is tax cut on this. We've also seen that when there's been massive deficits. I'm not saying we don't do some of this, but the data doesn't show that. What we saw was increased spending, increased behaviors that were out, especially on the corporate tax cut. There's also about $500 million in savings that the state of Minnesota did not spend. So I'm not saying that we can't try and put this into, get it into a little more balance. But again, I want to remind everyone, January of 2020, when I said, no, let's freeze in place, the same tax cut was proposed then, which would have led to billions in deficit spending. So I'm not saying that there's not some room there, but I think just the knee-jerk reaction to tell them that this is just a gross over taxation. I do say that revenues are up, so let's return it. And I think that there's a mix here. Let's return a chunk of it in one time, and then let's take a stab at some of the working class folks, some cuts that are in their child tax credit. I'm willing to look at their the first tier look, as long as we're excluding some of the wealthier Minnesotans. But to just say simply is that, again, I recall, since I've been governor, we've lowered taxes. We've not raised them. What changed was the environment that's out there. And just to be clear, all of you have covered this. If this were a deficit, they would be blaming one person. Because it's a surplus, apparently has thousands of mothers and fathers, but deficits have one. So I think my job is to make sure state government continues to function on that. But I do think it's a fair point to say, now is the time to help those families out. Let's do a little bit. That's why I keep coming back to this. We are not that far apart. We are not that far apart on some of the things that we can do, and there's a lot of agreement. And I think if we went into this session less of a political messaging session and more of a brass tacks, let's get this done and say, you know what, because I know I'm not getting everything I put in the budget. I recognize that. But to come into these negotiations just, nope, we're not doing this, we're not doing that, we can't get there. There's plenty of room.
Governor, I've got a question here back behind the photographers.
Sure.
Will you do a formal supplemental to your supplemental? If so, when? And what is your thinking going in as far as one-time kind of expenditures versus some of the ongoing expenditures such as long-term care, staffing that have come up? What are you thinking?
Yeah, I think it needs to be a balance, and that's why I think this approach to moving Minnesota forward is better than if this is, we're not doing anything else, we're not doing hero checks, we're not doing direct payment checks right now, we're just doing tax cuts permanent on there. I don't think it's a balanced approach. It'd just be like your own portfolio, measuring it between your 401k or some of it in stocks and bonds or others in the stock market, whatever, trying to balance it out. So I think in answer to that, Peter, we'll go back because, again, I received this briefing at the same time that the legislators receive it. My team starts to tear through this some or whatever. I believe it was at 10:30 this morning we talked. I do think maybe it makes sense, as I said, in first blush, running numbers on that. I think we can triple those checks we talked about, and I think it created more space to have discussions around some of these other things. But what I don't want to see is, I don't want us pulling money for tax cuts to the wealthiest Minnesotans at a time when we know that there's things we need to invest in, especially around education, healthcare costs, those. And you can do it all. You truly at this point in time can do it and not leave deficits going into the future. So I think it's a balanced approach. We haven't said whether it'll be officially. I think what you'll see, Peter, is us to go back, look at those numbers, kind of reconfigure what we came out with the first time and put that out again. That does make sense. There's no, in these off-year budgets, there's no official time when we need to do that, but I do think that makes sense because we're starting to see now, which is good. We saw Republican proposals come out, we're seeing Democratic proposals in the House come out, and that's the way this is supposed to work. Now we start meshing them together. Petty, we might have time for another one
if Governor.
Yes.
Right over here.
Yeah, sorry.
If there is $4 billion in the bank already, how much of that, or is there an additional amount? How much do you think is appropriate to spend right away?
Well, I'm going to wait till we get this. This is a question I asked this morning on this, what's in the bank and the complexity of what you can expect numbers coming in. I think what you need to do is you need to make sure you're not at this point in time till we start to get a little more clarity, especially with the Ukraine situation. I think you need to focus pretty heavily on the one-times. I do think it's appropriate to repay the UI Trust Fund. I think those hero pay, I think some one-time things. I think we ought to slow a bit here, and we'll get some clarity, I think, over the next month or two about what long time looks in that, and then have that. So right now, I'm being pretty careful that what we're proposing is one time. It meets what's in the bank. It doesn't commit us for long-term commitments that we can't already pay for. But some of you did the math on this. If this would continue on, I think we proposed right around $9 or $10 billion worth of costs, and this starts to come in line. Now, I remind everybody, I know you're looking at this, the legislature is still sitting on $1.2 billion of COVID relief funds that need to be appropriated this year that were not appropriated out, both for the relief of COVID, and it has quite a bit of needs in that. So in the 9.2, you can actually add the 1.2 to that, so it's the 10.4 that we're looking at. And I think we're trying to stay, what we're proposing, that money that goes out meets what money that's in the bank. Yes.
Following Bill's earlier question on the rebates, did you say this summer? So even if the legislature agreed to do some sort of rebate check like May 15th, right, the last week of session, you think that realistically...
I asked this question. I don't want to put Commissioner Doty, we're in his house and he's here. I don't want to put him on the spot, but I asked him what he'd do. His team is prepared to do this because I asked them early. I said, if I propose these, because I feel very strongly about this, you know, you can politically try and make whatever case you want about why inflation's there or gas prices are going up. I think folks who see the global economy connected know it's a little complex. But when you're an individual family member and gas went up 14 cents today because of the Russians invading Ukraine, money in your hands right now. So my thing to him is, I certainly want them to do it correctly, but I said, start thinking about and build the infrastructure ahead of time so that when we get this thing through, these things can move. And I told him, just to be, and I don't want to put him on the spot, I said, people need this here before summer. This is the times they're thinking about it. Kids are getting ready for summer. I mean, these are $1,000 or another $1,500 on that. Now you can go to camp, you can pay for the gas, you can do some things. And that, again, with rising wages, because the story in the paper today is Target's going to start paying $24 an hour starting wage for many of these jobs. That's the other side of this thing, that if we can give some stability right now and then talk about some of those long-term reductions in costs, whether they be in taxation, child care tax credit, or give them some certainty around health care and child care. That's what we're hearing time and time again. So we can do that. We can get it out quick. I'm not going to put them on the spot for the moment, but just to be clear, I've made it clear. I have a sense of urgency around this. I don't want to wait. I don't want to see this. I don't want it to go into next year. Let's get these things done right now. That's the reason they've been waiting and preparing for these hero checks. The minute that passes, we're going to start processing them.
Thanks. Governor, I didn't hear you talk at all about increasing spending. You've got a Democratic constituency out there who wants to see more spending on programs from health insurance to child care, all sorts of things. What's the deal?
Well, we do. I'm certainly going to, that's what I said. And there's plenty to go around on both. I'm not going to give tax cuts to the top end of things, but I'm certainly want to make sure that we're investing both in child care. We know that that's a big piece of this. We know upping those rates. We're hearing from the business community that it's a top priority of theirs. Investments into education that we know that work. And many of these are one time. We've got a little bit of long-term investments there, but all of that balances out. So the question's going to be here is, should we provide immediate relief? Should we provide long-term cost savings to working families? Should we invest in education? Should we invest and talk about a bonding bill to get done and all that? Or should we give all of tax cut with some of it going to, a big chunk going to the top? I think that's the only ideological split that's happening right now, because I think you're going to see legislators are hearing from their folks all over that they just simply want us to get this package done. And so, yes, there's some in there. I certainly want it to be there, but I'm going to caution those folks that I believe in. We need to be very cautious about creating new ongoing long-term spending. And that coin is it has two sides of this. When they did the 2018 tax cuts or whatever, nobody wants to figure that as a cost. That has a long-term cost. When you cut taxes, that is long-term costs and spending. And I said, if we create new programs, we need to be very clear about what that's going to be. So we've been pretty, I think, disciplined about not creating a long-term tails problem. And I think that's what bodes well. After listening to this presentation, I think there's every reason to be optimistic, but over these last 2 years, here we are with maybe the biggest conflict since World War II in Europe. We're coming out of a global pandemic, but we have to see what's next, and we have to prepare for that, and I think it's good to be prudent. But I want to thank you all. I want to thank this team up here for doing the work they did, and it's good to see you all back in this room again and actually see a lot of faces, so thank you.
Good afternoon, everyone. $9.3 billion surplus. To me, that's just absolutely mind-boggling. We thought $7.7 billion was massive. $9.3 billion surplus is absolutely mind-boggling. And I think today's forecast really strengthens the argument for permanent ongoing tax relief to working Minnesotans and senior citizens. I don't know how it gets any stronger than what we saw today. The people of Minnesota are being overtaxed. The state of Minnesota is overtaxing the people of the state of Minnesota at a time when they're struggling with record inflation. We know record inflation is affecting all of us. It's eating away at family budgets, and the best way to address that is providing permanent ongoing tax relief. So we're very pleased to hear the governor is actually today somewhat supportive of permanent ongoing tax relief. And find it somewhat interesting that his number all of a sudden today has increased to match the number that we proposed last week. But the difference is Senate Republicans have proposed, again, permanent ongoing tax relief. So working Minnesotans see more money in their pocket every single paycheck, week after week, month after month, year after year. No gimmicks that end after the election, no election year gimmicks, nothing like that. Permanent ongoing tax relief so Minnesotans see more money in their pockets every single paycheck.
Yeah, good afternoon. I agree. Obviously, very good news for the state. But I think if we stand here and don't admit that Minnesotans aren't seeing the same kind of surpluses in their family budgets, we are tone deaf. And I think that's something I would put on the governor. We have absolute record inflation, and Minnesota families are paying more for the things that they buy every day, from milk and groceries to clothing to automobiles to gasoline to get to work. So Minnesotans are feeling the pinch of record inflation, and at this time we've got a record surplus. I think this is the largest surplus in Minnesota state history. Our message to Minnesotans is clear. You should expect us to reduce your taxes permanently. If we have a surplus like this, and there's evidence today in the forecast that this surplus is growing, and it's growing on an ongoing basis. We have a $5 billion structural surplus in the current biennium. We have $6 billion in the tails. So this problem is something that can only be solved with reducing taxes for Minnesotans permanently. Our job is to collect taxes from Minnesotans and make sure that that number matches the spending, the amount of spending that we're required to do for the things that Minnesotans rely on their government to do: education, roads and bridges, the necessities, right? Our job isn't to find new things to spend money on. And our job certainly isn't to give one-time money back to Minnesotans in an election year. I think Minnesotans are smarter than that. What Minnesotans want and what they need are permanent tax reductions, permanent reductions to the amount of taxes that they pay in and year out to the state of Minnesota. And that's our job and that's our task this year. So what Minnesotans should expect from us is ongoing reductions in the taxes that they pay to the state of Minnesota. Anything short of that is a failure on our part, and frankly, I think it's Democrats trying to protect those revenues so that they can spend them in the future. And we'll continue to see these sorts of surpluses until we make those permanent tax reductions, so that our tax collections, are not greater than the budgets that we're setting at the state of Minnesota. That's our task. That's our job as legislators. So I think when you look at the struggle that Minnesota families are going to have, Democrats' solution is we're going to put $10 in your pocket and then we're going to take $20 out. Minnesotans aren't fooled by that. Minnesotans understand that they want their taxes reduced permanently, and we have the ability to do that. That's our job. So things like the Social Security tax, reducing the state income tax across the board, those are things that Minnesotans should expect us to do this year. I do want to say, last week there were 5 Democrats who proposed a tax holiday on the gas tax. I want to point out that all 5 of those Democrats voted for permanent gas tax increases last year, all 5 of them, and those gas tax increases were about twice the temporary reduction they were proposing. 3 of the 5 proposed an increase that's frankly 10 times greater back in 2019. Minnesotans are not fooled by this, and obviously we know that Democrats in the House are getting desperate when they're starting to buy into these election year gimmicks by trying to reduce people's taxes in an election year on a temporary basis. Minnesotans should not be fooled by the temporary nature of all of that. Minnesotans should expect permanent reductions to their taxes, and that's what we're going to deliver this year.
Questions? Yes, sir.
What do you think about the governor's response about income tax cuts, that he's willing to entertain the cut at that lowest bracket, but only if it excludes the highest income Minnesotans? Do you think this should be for all Minnesotans or just some Minnesotans?
So the reason there's a massive budget surplus is because the state of Minnesota is over collecting from the taxpayers. All working Minnesotans have contributed to this massive budget surplus, and as a result, if we give tax relief to working Minnesotans, all working Minnesotans should receive that tax reduction.
Can I follow up on that, Senator? Over here. All of my friends who are in the upper, and my relatives who are in the upper tax brackets, their surpluses, their household surpluses have grown immensely during the pandemic, much in the way the state has. What is, they've kicked in, but what is your best argument for people who say they don't need tax relief?
Well, thank you for the question. I do believe, and it's a known fact, that savings have increased at the highest level ever. And so people they buckled down through the pandemic. So you are seeing a greater amount in their budget that they're sitting on. That's a pure fact. But Minnesotans have been paying way too much. The best way to stabilize everybody's budget is to do permanent tax relief. And let us not forget that we have some other commitments to take care of this year. The UI trust fund needs to be done now. The Senate passed it off the floor in a bipartisan manner, and not sure why it hasn't been executed off the House floor yet. Also, we have a bonding year, so we do have some things that we are going to be looking at. But of course, today is the big staggering $9 billion surplus. And I just want to say the best way we can treat and stabilize Minnesota and the people in every single household is to give a permanent tax cut.
Can I ask a question about tax cuts versus one time? If it spends the same for me, all dollars are green for me. I mean, what difference does it make? And do you guys really think that Minnesotans that you speak for are going to reject a $1,500 check in June and send it back or something, or be insulted by it? Why is it that you're not thinking about both some sort of a one-time rebate and ongoing?
So the proposal that Republicans rolled out last week would provide working Minnesotans and senior citizens permanent ongoing tax relief. So instead of getting the answer seems pretty obvious to me. Instead of getting at the time $175 or $350 one time is what the governor had proposed. Republicans proposed permanent ongoing tax relief, so individuals would receive roughly $500 more and families roughly $1,000 more every single year. So would you rather receive a one-time payment of $175 or $350 or $500 or $1,000 every single year? To us, it's more important to put more money in people's pockets every single paycheck, every single week, every single month, every single year, permanent, ongoing.
But today he said he was willing to think about both. So what I'm asking is, why are you so dismissive of doing both?
The permanent tax relief that we proposed would be effective this year. It would be effective immediately. So it would put more money in people's pockets right away. So that's the proposal that we think is best. In addition to that, it fully eliminates the state income tax on Social Security income. The state of Minnesota is one of only 12 or 13 states that still taxes Social Security income. I'm hearing from senior citizens every day that they're concerned about their budget. They're living on a fixed income, and they think it's really important that we provide that permanent ongoing relief, not only for working Minnesotans, but for our seniors who are receiving Social Security income.
Yeah, I would like to add to that. I think it's important to realize that this is the first time now our forecast is showing that our surplus is growing into the future. Don't let that, don't sleep on that piece of data, right? So 5 billion structural surplus in the current biennium, 6 billion in the tails. So we're showing that on an ongoing basis, the revenues to the state of Minnesota are growing. And they're more than we need. So it's very obvious that if we just do one-time tax relief, we're still going to have that big surplus next year. We're not reducing the amount of collections that are coming in. Our job is to make sure that the collections and the spending match. And if we don't do that, we're over-collecting from Minnesotans. It's really obvious, right? And we get it. We get what the one-time stuff does. It's an election year gimmick. I have been doing this for 10 years now. This is the first time when I can really remember Democrats proposing tax relief, okay? And their tax relief isn't really tax relief. It's just writing a check to Minnesotans in an election year. They're not reducing taxes. They're still going to collect the same amount of money from Minnesotans, and we're still going to have the same surplus going forward. So their answer, while it might be self-serving to them in an election year, doesn't solve the problem. And that's why we know that Minnesotans are smarter than that. Democrats want to keep collecting too much money from you and then decide to give you small little checks back. That's wrong. And we know that Minnesotans will reject that.
Okay, can I follow real quick? But the last time we were all here together, you said, I think we should call for a moratorium on energy taxes, which would include a moratorium on gas taxes. It was a good idea in December, and now it's just a bad idea?
No. Don't get us wrong. We're very happy to give Minnesotans their money back. We're doing it in the same way that they're doing it. We're going to do reductions in this year. That's what Senator Miller just told you. So our plans will make reductions this year, but they'll also continue those reductions into the future. That's the difference between our plan and the Senate's plan, or excuse me, the governor's plan. The governor's plan only gives people a check back this year. It does not reduce collections at all and will continue to collect too much money from Minnesotans. It's very, very simple. And by the way, if the Democrats in the House want to do a temporary gas tax that will actually increase the cost of a gallon of gas, 28 cents a gallon, right before the election, I'm very happy to watch what happens to them on Election Day once that tax perceived increase in gas goes up after Labor Day. So that particular one is a bad idea. If we're going to reduce the amount of taxes we're collecting from Minnesotans, let's decide what that number is and reduce it permanently.
Mr. Leader, I'm going to follow up you a little bit. Either of you.
We'll let the House work that one out.
Senator Miller or Representative Dowd, either one. I understand what you're saying in terms of over-collecting. The Democrats will say, that's fine. However, do people at the top end of the income brackets deserve to get, I'll just pull a number out of the air, a $10,000 check rather than a $1,000? That's really what we're talking about. You guys have not answered that. So please do.
You're really pulling numbers out of the air because we're not proposing giving anyone a $10,000. No one's getting a $5,000. What the bottom line is,
are you saying that folks that
the state of Minnesota today we found out has a $9.3 billion projected budget surplus, up from $7.7 billion. So the surplus is growing. That means one thing. It simply means one thing. The state of Minnesota is collecting too much money from the taxpayers, all taxpayers. If you're a taxpayer, if you're an individual or a family, if you're someone paying taxes in the state of Minnesota, the state is collecting too much money from you. So what Republicans have proposed is permanent ongoing tax relief for all working Minnesotans and senior citizens.
And what you're saying is that upper income.
Let me give you another way to look at this, okay? So what we learned today is that about $5 billion of the current surplus is structural surplus in the current biennium, and $6 billion in the tails, okay? That means about $3.5 billion of today's surplus is, am I doing the math wrong there? $4.5 billion is 4.1, 4.2 is one-time money. So the governor's only, so we have more ongoing structural surplus which means we're collecting too much money. $5 billion in this biennium, $6 billion in the next biennium. It's growing, okay? Why is the governor's response one-time money, right? What we should do is do the one-time money and the ongoing structural reductions in taxes. We can mince this all you want, but the reality is Minnesotans expect us to reduce their taxes permanently, and that's what we will deliver.
Can I ask about the uncertainty aspects of this? Are you planning to leave any additional buffer or a buffer at all, given what's happening abroad, what's happening with inflation, supply chain, interest rates, those types of things?
Well, the way the tax collections are going, there will continue to be a buffer in the state budget. And in conversations with the budget folks today, while they said there were concerns, they're not significant long-term concerns to the United States and specifically Minnesota. At least that's what I heard. There are certainly some concerns for Europe and that part of the world, but not significant long-term concerns for Minnesota is what I heard earlier during the presentation.
So you're comfortable if at the end of the session, all of the federal money and all of the surplus is spoken for, whether it's through the permanent tax cuts you want and a combination of some of the stuff that they want, or are you planning to leave some aside for you guys to deal with next year when you come back and set a new budget?
Yeah, there will be money left on the bottom line. In addition to that, the cash flow and budget reserve accounts are full. No one has talked about that. The commissioner mentioned it earlier. It was in the presentation, but there haven't been any questions about that. But the budget reserve and cash flow accounts in Minnesota are completely full right now. So that's why we think the best way to put more money in people's pockets is through permanent ongoing tax relief. We want to let Minnesotans decide what's best for them and their families, what's the best way for them to spend that money. The way we do that is put more money in people's pockets.
Are you open, Leader Miller, are you open to, Tori over here, sorry. Are you open to taking another look at frontline worker checks, maybe negotiating on that to expand those given the extra surplus here to get the UI deal done in 2 weeks?
Let's go back to this fall. There was an allocation of $250 million. There was a subcommittee that was put together. Republicans put forward a proposal that focused on frontline healthcare workers. Democrats put forward a proposal that expanded that to essential workers, and an agreement could not be reached. Since then, the November forecast came out, showed a $7.7 billion budget surplus. Now the February forecast came out, shows a $9.3 billion budget surplus. Instead of picking and choosing workers, pitting one worker against another, Republicans feel it's important to provide tax relief to all working Minnesotans. We feel that every Minnesotan who's working in Minnesota right now is essential, so we want to put more money in all of working Minnesotans' pockets, including senior citizens. So I'm not excited about picking and choosing one worker versus another, pitting one neighbor against another. We want to provide permanent ongoing tax relief to all working Minnesotans.
Senator, you're wearing a yellow and blue tie. I don't know if that's in reference to the war in Ukraine, but what would the Minnesota Senate like to do in regards to this issue? Can it do anything in your mind?
Well, we can continue to pray for the people of Ukraine, stand with the people of Ukraine, and we hope for a peaceful resolution in the very, very near future, but we certainly stand with the people of Ukraine.
Would you support a boycott of Russian products or anything of that order?
I would be, I guess I would have to see the proposal on the boycott of Russian products. I know there's a lot of that going on. What I can tell you is I stand with the people of Ukraine.
We're going to keep it in the forecast. Any other questions?
Thank you, everyone. Have a great day.
The considerably shorter leaders have approached. Well, good afternoon. Today's forecast shows that Minnesota's economy is doing well. at least at the surface level. Corporate profits continue to wildly outpace expectations. Now it is the job of state leaders to address the challenges that people are facing and to ensure that workers and families are benefiting from the economic growth that they are helping to create. Many Minnesotans are living paycheck to paycheck, and they're concerned for their futures. State leaders must be focused on our work to help Minnesotans with everyday costs and with improving their economic security right now. We also need to invest in our communities to better ensure public safety. House Democrats will continue our work on policies that we know will help our workers, our families, and our communities. Things like paid family leave, earned safe and sick time, affordable health care, affordable child care, good schools, bonuses for frontline workers, and jobs with wages and benefits that can support a family. With both a global pandemic and the war in Europe, there is considerable uncertainty moving forward. In addition to helping workers and families, this is also a time that warrants caution and prudent fiscal management. The last 2 years have been incredibly difficult and challenging for so many, but we have an opportunity now to truly deliver immediate help for Minnesotans. I hope that Senate Republicans will join with Senate Democrats, House Democrats, and Governor Walz to work together this session to produce results for the people of Minnesota.
Thank you, Speaker Hortman. I'm Melissa Lopez-Franzen. I'm the state senator, Senate Minority Leader for the Minnesota DFL. And I'll just add just a few comments about this good news about having a $9.5 billion surplus. It has been partly with sacrifice, hard work for those who are part of this state, who contribute to our state and give us the trust to make the decisions for the priorities of our state, whether it's education, healthcare, or other items that have been discussed. And I would characterize as the Minnesota Senate DFL is hearing Minnesotans, and we are listening to them. I'm not sure where the Republicans are listening to Minnesotans that say that they want it all back or that they have expectations of what to do with this surplus. But I certainly can tell you that our caucus has been around the state talking to frontline workers, talking about child care, talking about institutions of higher learning. I just spent a little time earlier today talking to one of the most precious institutions, the University of Minnesota, and we were talking about a 95-year-old building where they're teaching chemistry, and their grandparents had spent time learning chemistry, and the cabinets are still the same, and the infrastructure in one of our most prized possessions, and we're not investing in it. So we're talking to Minnesotans. There's definitely need around our state to invest and to take this opportunity, this Minnesota moment, and be cautious about what we're doing with these funds, but also take the opportunity to put it to work where it would reap benefits for our entire state, whether that is broadband for all. That is something that we can do and set ourselves up for success, not just in our education systems, but also in our workforce. Whether it's childcare, like was mentioned, we know and we've talked to childcare providers who are at the brink of closure still today because they're still feeling the pandemic strains and challenges. And we haven't done enough to continue to prop that particular area of our sectors, because if we don't do that, people can't go back to work. Families can't be able to continue to have this burden of increased cost of childcare and lack of childcare availability across our state. When we talk to our small businesses, both Speaker and I have been talking to a series of small businesses, and we heard that this unemployment insurance issue is real, something that a lot of larger businesses claim to be their most important item for the agenda of our legislative session. But when you talk to small businesses, $80 a quarter doesn't break the bank for them. They need support. They need the distribution channels to be better. They need supports for payroll taxes. They need other supports that we have an opportunity here in Minnesota to help them with. So when they're talking about picking winners and losers, they're actually doing that by focusing on large businesses and not the little Main Street businesses that we're talking to and going straight to them. I would also say that we've talked to frontline workers, and we all know we have workforce challenges and a workforce desert here in Minnesota, whether it's nurses that we're bringing nurses from out of state, whether it's teachers who are leaving the profession because of the strained challenges in the classroom. What we need to do here is focus on those same areas that have propped up our state during this pandemic. And one of the things that we want to make sure that is we support families in the classroom, families to give the tools that they need to be successful. And one of them has been the issue of supports in the classroom, whether it's the best teachers available, but also the wraparound services that we know are so important to get out of this pandemic, like stable housing, like food security. Inflation has really eaten the budgets of Minnesotans, and we want to make sure that we take a moment to recognize that and help Minnesotans. So giving it all back and not focus on the uncertainties that we have in the future with what's happening in Europe and Ukraine, what's happening right here in Minnesota, where we're still moving past this pandemic, but we don't know what that's going to look like 6 months down the road. So our caucus is prudent. We were elected to be responsible stewards of taxpayer dollars. We intend to do that, but we're not going to miss the opportunity of what we have here today to celebrate a surplus, but also be able to invest it in where it's needed the most to help us, our economy to grow stronger and our state to grow prosperous. And I guess we'll open it up for questions.
Speaker Hortman, could you envision your caucus supporting an income tax rate cut in the end scenario here?
Well, I think we'll need to take some time to look at it, but I think I would be very cautious about making commitments into the future on either tax cuts or ongoing spending. I think we have to take into account the uncertainty that's still associated with the pandemic and with the war that has started in Europe. When this forecast was put together, that war was not on the horizon, and so I think we would be prudent to probably sock away a big chunk of it into increased budget reserves.
How about the tripling of the Walz checks? You like that idea? 3 scoops of Walz checks.
What I'm most looking forward to is seeing the tax bill that Chair Paul Marquardt will put together. I know that he is focused on working families that are struggling to get by. And I know a big proportion of that bill will look at families who are struggling with childcare expenses. You know, what the Republicans want to do is they want to give money back to people only through the tax code and not through other ways that we invest in people's lives. They're not talking about increasing rates for childcare providers. They're talking about using the tax code, which results in giving more money to people who already have more money, and in many cases, people who don't need more money to come back. What I think the Minnesota DFL is focused on is making sure that the people who created this surplus, the consumers and the workers, share in the surplus, and that we look at distributing the surplus in a way that helps the people who need the help and doesn't help those who don't need the help.
So is that it? So do you support the rebate checks then?
You know, what I support is a one-time tax rebate as a way to put money in people's pockets. I don't know if cutting actual checks is the most administratively efficient way to deal with that. I think that doing $1,500 per person for frontline workers is well overdue and entirely warranted. Nurses, police officers, firefighters, teachers, all these folks who've been on the front line who have kept our economy going during COVID-19. I mean, remember that when COVID-19 struck and we kind of shut down, we weren't sure if our economy would be in free fall. Who kept our economy going? Well, the grocery store workers who went to work every day so that we could eat. The child care providers who took care of the children of the first responders so that the first responders could continue uninterrupted services to all of us. So one thing that is true across legislative and executive and parties is we want to put money in the pockets of Minnesotans. In the Minnesota House DFL, with our colleagues in the Senate, we support putting money in the pockets of frontline workers first and immediately, and then we support putting money in the pockets of Minnesotans through increasing the amount for our childcare providers and also our higher education institutions and making sure that students can get the education that they need without incurring significant debt.
Madam Speaker, back to the tax issue. What has happened to the kind of the traditional DFL cut property tax agenda? And is there some money that can be plugged from this huge surplus into addressing property tax increases?
Yes, Representative Marquardt is working on a property tax refund proposal, in particular focusing on senior citizens. The great thing about the property tax refund program is it is a way to get money to people who need it. Those who are struggling with paying their property taxes and staying into their homes. There's an income subtraction that Representative Marquardt is looking at, subtracting even more of the Social Security income from that. So it would be aimed towards helping seniors, but helping those seniors who need it. If you look at cutting the Social Security tax and you look at people at the very top of the income scale, it provides thousands and thousands of dollars in a tax cut to people who are already making hundreds of thousands of dollars a year. What we need to be looking at is our first-year teachers who are making $34,000 a year and say to ourselves, in a state that has a $10 billion surplus, we really think we should pay first-year teachers $34,000 a year? I think those are the kind of questions that we'll be asking in the Minnesota House.
Speaker Wortman, can you talk about where the two chambers stand on the UI and the frontline workers? The House passed frontline workers. The Senate has prioritized UI trust fund at a level that they see fit that's a little bit lower than a House plan. Can you just say, okay, you get what you want and I get what I want and move on? I mean, you've both expressed a desire to get those things done, and at least on the UI front, there's a deadline looming here.
Yeah, I've offered just such a deal to Senator Miller, and their position right now is they're willing to do what they want, but they're not willing to do any of what we want. So, I think certainly we can move somewhat rapidly on these things, but there has to be give and take. There can't be just one side giving and the other side taking. Both sides have to give and take.
To be clear, the deal that you offered to Senator Miller was accepting that what they passed for UI trust fund insurance?
Forward on both UI and frontline workers, and to have the conversation about doing both at once. But Senator Miller was not interested in having that conversation at all.
And if I may, in the Minnesota Senate, we've actually passed the unemployment insurance bill in a bipartisan way. 51 members voted for it in the 67-member body. So it's not one or the other. We can do both. What you're seeing from my Republican colleagues in the Senate is this continued notion of obstructing, and I don't need anything, I don't want anything, I don't want to recognize that workers actually help those businesses, be able to be where they are now. And we made the promise last session. We passed a bill, and we had a working group, and that was a promise made. And all of a sudden, this is a new priority for the Republicans when we could actually do both, and the Senate Democrats want to do both, but we're not going to leave workers behind.
I think the governor may have hinted at a path out of this, and that is through the check proposal. And on the other side of it, Senator Miller said, well, we need to give that amount of money to everyone, not just frontline workers. Could you potentially move forward with that piece of it? In other words, checks to everyone, as it were, in lieu of the frontline workers, so you get something done on this and then address the rest of it later, or is that politically not doable?
Well, hopefully things will change after this new forecast has come out. But what I'm concerned about with what we've encountered so far with Senate Republicans is an unwillingness to do anything, that they are so convinced that their fortunes are going to be good in the November 2022 elections that they are obstructing progress on anything significant this year, with the belief that then they will be able to spend all $10 billion by themselves in the next biennium. So what I would say to that is that ordinary, everyday Minnesotans are counting on us to do the jobs that we were hired to do. And even though the state has a projected $10 billion surplus, individual households are struggling, and they're struggling right now. So this sort of partisan approach of like, no, we're not going to play ball, and then we're going to take it to the election, doesn't do any good for the people of the state of Minnesota.
Senator Miller said hey, let's give tax relief to everyone. Okay, you're saying let's give it to frontline workers. My question is, well, the politicking aside, is there a possibility of moving forward in that area? Could you do that, do you think?
I wish we could put the politicking aside, but so far, what I have heard from the Senate Republicans is there's an unwillingness to engage at all on getting money to ordinary Minnesotans. So far, it's give us $2.7 billion to subsidize mainly large corporations who are doing better than they've ever done. And we'll maybe talk about what we can give to Minnesotans later.
Speaker Hortman, you brought up teacher salaries. There are 2 major Minnesota districts that are ready to perhaps have teacher strikes. Is there anything the legislature can do to head that off or in the short term? And are you worried about the optics of that coming off of the COVID disruptions if those 2 districts go out on strike and those children are kind of left out there on their own?
Well, I think it's important that we look at the whole waterfront of mental health stress that has arisen during COVID-19. We have been 2 years, basically all of us, in a very stressful environment, and teachers among the highest stressed professions. And so if we look at what's going on in the Minneapolis and St. Paul school districts as an outgrowth of the extreme stress that those teachers have been under and the increased tools that they need to deal with both their stress and the stress of the children that they're teaching, we should be finding the resources to invest in recovering from the COVID-19 pandemic. During the pandemic, our rates of overdose have shot up. Our rates of people going to the emergency room with opioid addictions and healthcare problems is just absolutely shot up if you look at the trajectory on the charts. And so while Republicans would like everybody to believe that everything's hunky-dory, we got a projected $10 billion surplus. What's true is that the state and its people are under a lot of stress, and they need to rebuild and recover from that. So I think the question that you raise is about teachers about to go on strike, but when you look at what is the reason, I think the reason is the mental health stress that people are going to need some help recovering from.
So is there anything the legislature can do now to step in to put a Band-Aid on that situation so those districts perhaps don't go on strike?
Well, the difficulty is in seeing the legislature move quickly. We can do it. We have done it. If you look at November 18th, 2020, Governor Walz said we need to close restaurants on Friday. It was like 2 days later. And by December 13th, we passed $242 million in extended unemployment benefits for unemployed workers and directly shipped out $242 million to businesses that were struggling with those abrupt closures. So we can move very quickly, but we tend to be not the entity that puts out the fire. We're not the entity that's dumping the water on. We tend to be the entity that plans the fire stations and builds the fire trucks. And so I don't know, in the case of the Minneapolis and St. Paul school districts, if we can move at a fast enough pace to have an impact on that particular situation. I certainly will be working with my colleagues to try. I think we have a community safety crisis, and I think we need to try to move as quickly as we can, but we have to be realistic about other entities of government and their role and how much more quickly they're able to move.
I'm just going to respond to that too. This Thursday, the Minnesota Senate is going to entertain 3 proposals on education. None of them are dealing with this issue. All of them are distracting from what these providers and these teachers and school systems need, which is, to your point, better support, better funding, and more respect for their own profession. We're hearing bills that are not tackling the core issues that we're seeing in school districts. And if you see around the country, you heard from superintendents, some of them are literally talking about suicide. This is a serious issue that affects every corner of our country, and in Minnesota, we pride ourselves with the best education. Meanwhile, while we have a $10 million or $1 billion surplus, we're still arguing that we've done enough for schools when we're still fighting over inflationary costs. That's how every 2 years, we fund our schools, and what we do is just fund inflation if we're lucky. We have an opportunity here to fund schools appropriately, so they have the supports, the mental health supports for staff and children and for families, those wraparound services, and also catch up with the last couple of years that a lot of our students have suffered. So that's where we should be spending our time, not on the 3 bills we're hearing on Thursday that do nothing but demoralize teachers instead of supporting them.
Can I ask actually both of you a last question? It's going to be really good. Speaker Hortman, I'll let you go first. Yeah, Eric's going to be the judge of whether this is good. You both have complex groups of people in your caucuses. Some are suburban, some are urban, some are greater, and some of them have been trying to make some proposals that work for them in greater Minnesota, for instance, like some policing issues, the gas tax moratorium. Maybe they would like to see a rebate check. Maybe that would help them. How do you balance that out and maybe, because what I see is they don't need to wait for the Republicans to attack those proposals. They get it from within each of your caucuses. So how are you going to negotiate that and go forward from there?
Well, members make proposals and then they work their way through the committee process. So one example would be the gas tax holiday proposed by Representative Stevenson, Representative Wolgamott, Berg, Hansen, and there was one more person standing with them. So that will go to Representative Hornstein's committee. If it makes it through Representative Hornstein's committee, it will go to Representative Marquardt's committee. So, and then with regard to the governor's proposals, we will hear those bills in committee and we will weigh them against other proposals that are brought into the committee. So at the end of the day, it is the entire caucus making the decision together. The folks on the Environment Committee have a little bit more voice into what we'll eventually do on environment. The folks on the Tax Committee have more voice into what we'll eventually do on taxes. But it is through the committee process and through the course of the session that these initial bills that are introduced become caucus proposals or do not become caucus proposals. The difference in being a caucus leader as opposed to being a governor is we're a bottom-up decision-making process, and he's the governor. He gets to tell his commissioners what the policies are, and I'm the leader of a caucus that I work for them. And they will tell me over the course of the session which of the proposals have legs and which will make it. And although it might not seem like the most exciting part of session, because it doesn't get covered that much, is the committee process. That is where we hear from people like economists and people who are experts in their field, whether it's public safety or whether it's public health, to determine which proposals have the most merit and can survive that committee gauntlet.
Appetite for your caucus.
So the question is how we keep our caucus united on issues like.
Well, it's sort of that. It's also, can your urban DFLers throw a bone every now and then to your suburban and rural people who are in tougher fights than they are? They don't seem to be willing to do that.
Well, I'll speak on behalf of my colleagues in the Senate. We're having robust conversations very regularly on every single issue that's come to our attention in terms of this session. We don't set the agenda in the Minnesota Senate right now. We're in the minority, but we're a mighty minority, and we're going to be talking about those issues that are important to our district. So I'm not about to censor any of my members on how they want to speak on behalf of their constituents. What I will say is that we all have the same goal of doing something about public safety. It affects every single community, whether it's suburban, urban. In my own district, we've had 3 carjackings in a series of about a month. I'm a small business owner who has an office in Minneapolis. I want to make sure that Minneapolis is safe across the border from Edina, Minnesota, where I live. We all see that we need to not only have good policing, but we also need crime prevention, and we need to do both. So I think we are aligned on our flavors, how we get there, but we certainly think that there's room for both. Otherwise, I would say that the Republicans always focus on trying to characterize as not respectful of our law enforcement. But in fact, we know that we have to do this hand in hand with good law enforcement and other issues that come to our attention too. We will work our way through it, but there is certainly more unity in our caucus to solve issues than people know We just need to show the way for the Republicans to allow us to do the work in partnership. But as you heard earlier, it's all about the next election, and we are here to govern. We're not here to talk about the next election. We have a unique moment in time with this surplus, and we're going to use it.
Madam Speaker.